In today's session, we have Tom Murray, Vice President of EDF Plus Business, Tiffany McGee, CEO of Pivotal Advisors, and Lisa Wall, CEO of USCIF, the Forum for Sustainable and Responsible Investment, along with Eric PITT, a climate finance consultant currently working with the Ceres Accelerator for Sustainable Capital Markets. During this session, speakers will discuss the 401k market, trends in sustainable investing, and the relevance of ESG investing to 401k plans. They'll look at the barriers that have limited sustainable investing in 401k plans to date, including relevant regulation, misconceptions about performance, and concerns regarding plan sponsors' fiduciary duties. And they'll introduce an initiative, 401c Climate, to encourage more sustainable investing in 401k plans. Now, over to Eric to get this session going.
Thank you so much, everybody, for joining our panel on ESG in 401k plans today. There have been so many exciting recent developments in climate finance. Some of the more visible areas of progress include the growth of ESG investing and the increase in net zero greenhouse gas emissions commitments made by asset owners and asset managers. A key driver of this ESG growth has been the conviction amongst younger investors that they should align their investments with their core beliefs. The majority of Americans invested in the stock market have access to the market through their retirement savings plans as their only exposure to stocks. And yet we see a tremendous disconnect. ESG has barely penetrated the nation's 401k plans. We're excited to talk to you today about this tremendous opportunity. And if Tom, I could start with you, can you give us an overview of sustainable investing in the 401k market today? Talk a little bit about the size and scope of those markets and the opportunity.
Terrific. Thanks, Eric. Well, as you started in your introduction, I really see sustainable investing and retirement plans in particular as an incredibly powerful and until recently overlooked and underutilized tool that companies and employees have at their disposal in the fight against climate change and in our efforts together to build a more sustainable and equitable future. Now, in the marketplace, interest and activity around ESG investing is surging. On the demand side, we've seen a recent GreenBiz poll that said nearly 3/4 of employees at Fortune 1000 companies want their employers to offer responsible products. We know this is incredibly important for young employees, especially millennials and Gen Zers, who want to work for both a paycheck and a purpose. We also know that ESG investing is one of the fastest growing segments in the marketplace. Recent research by Morgan Stanley showed that sustainable funds have grown over 40% since 2018, now accounting for about $17 trillion in assets under management, nearly $1 out of every $3. Now, despite this momentum, there is less than 5% of corporate retirement plans that currently include ESG screened funds. And even worse, less than 1% of the assets in 401k, corporate 401k programs are ESG aligned. So I think that brings us hopefully to both the challenge and the opportunity that we can talk about today. We see an opportunity to create a groundswell of demand from leading employers and millions of employees across the country to redirect trillions of dollars in employee-sponsored retirement programs towards solutions to climate change and towards solutions that help us build a more sustainable future.
That's great, Tom. Thanks so much. And if I could just ask you to say another word about the work that our organizations are doing together to try to promote this. We have an initiative called 401 Climate, so maybe you could introduce that to our audience.
Yeah, terrific. We're incredibly excited about that work we're doing with Ceres, as you know. We see this as the next frontier in climate leadership for companies. Over $6 trillion in the corporate 401k market that could help solve climate change. And that's really the goal of our initiative together. We want to work with partners like Ceres, collaborators like Lisa and Tiffany, leaders in the marketplace, to provide companies and employees with the tools and resources that they need to overcome obstacles and align their 401k plans with responsible investing opportunities and the net zero goals that many leading companies have already set. Our vision for this initiative is lofty but achievable, right? We want to create a future where every retirement dollar is invested responsibly. If we do that, it can help put us on a pathway to achieve our net zero ambitions by mid-century, and also create a future that's more sustainable and more equitable. We think this is a vision that's achievable. It's going to take leadership. It's going to take collaboration, but it's within reach.
That's great.
Yeah, and Eric, if maybe I could just jump in here. That 17 trillion from Morgan Stanley is actually from the U.S. Trends report, which came out in November. And Tom's exactly right. It's approximately 1 out of 3 of every dollars invested professionally are in some ESG strategy or fund. What's interesting is that climate is the #1 criterion looked at by money managers in terms of how they select their portfolios. It also comes out as maybe the 3rd shareholder topic in between 2018 and 2020. I think what's interesting, exactly as Tom says, is that has not carried over into the retirement space. So even more broadly speaking, there are 700,000 private sector workplace retirement plans covering 136 million participants, representing over 10 trillion. And though we saw growth in those plans using some sort of sustainable investment fund, one or more, between 2018 and 2020, the growth was minuscule over a starting point that's quite small. And so when you just look at the size, Tom's exactly right. It is an extraordinary opportunity, and not just in the corporate market, but in the federal thrift plan, which perhaps we can spend a few minutes talking about later.
Thanks, Lisa. And sticking with you, Lisa, I wonder if you could just talk a little bit about, why more plans have not embraced ESG, especially given the preferences of, investors and employees that we were referring to. What are some of the barriers? And maybe you could even share with us an anecdote or two around, organizations that have gone down this path and ultimately not been successful. What are some of the reasons holding these plans back?
I think they're multifaceted. One, I think plans don't get revisited very often. And so the momentum to kind of create change can sometimes be stalled. 2, there has been so much evolving regulatory environment around ERISA-governed plans by the Department of Labor, which is pretty much what most fiduciaries look at. And it literally has been a ping pong ball over the last several administrations, resulting in the last administration under Donald Trump, really putting a chill on it again. And so fiduciaries are risk averse. The financial services industry, for the most part, is risk averse. And so that makes fiduciaries not as keen to add that to their lineup. Additionally, because QDIAs, qualified default investment alternatives, is where you would get defaulted if you're not choosing an option yourself. Plans have been particularly loath to put an ESG fund in that because a lot of those are target date funds. And there are actually a real paucity of ESG oriented target date funds. And so all of those things together make it challenging. The other piece is participants surely have an ability to influence their human resources department to talk to their managers. But like most Americans, being an employee does not give you great knowledge of the financial industry. And I think most people don't really know what's in the retirement plan. They rarely look at it. They don't necessarily understand it, and they don't feel very empowered to have a conversation like that. We have some material on our website that would allow a plan participant to have that conversation. But this takes me back to what I consider basic education that needs to start in middle school and high school about what is a stock, what is a bond, how do you invest, right? What is a retirement plan? Why is it important? Too many people get 30 and 40 and 50 years old, and honestly, they've never been taught that. That is just a given, and it impacts the ability to participants to be their own advocates.
That's so great. That's so helpful. And Tiffany, if I could turn to you for a moment, I wanted to ask, what do you hear from clients who are considering ESG in their retirement savings plans? And what do some of those conversations that you have in the marketplace look like?
Yeah, so we do work with plan sponsors every day, and I think that there are two groups of people that we serve: plan sponsors, who are these people that are sitting in the HR departments and the benefits departments and leadership within an organization. And then also our end beneficiary are the plan participants, and so we have been hearing from through our plan sponsors that plan participants are interested in sustainable options on their retirement platforms. And so, plan sponsors want to figure out what's the best way for them to do that. How do you even start to implement a program like this? And I think that sometimes they may get pushback. How do you start that conversation within an organization? And I think that there is this kind of myth going around. I know that there's this myth going around that sustainable options, that utilizing ESG factors within investment portfolios, even including on retirement platforms, that you have to kind of trade off. There's this trade-off of return, and there isn't. And so I just wanted to just kind of highlight the fact, the CFA Society is really highly regarded as setting the standard globally for investment standards in terms of portfolio management. And in 2019, they actually put out a paper. It's titled "Positions on Environmental, Social, and Governance Integration." And so this paper, and I think everybody should really read this paper, because it really just tackles that issue. It really expresses the organization's view that the consideration of relevant and material, and I'm reading this so that I get this right, the consideration of relevant and material ESG information and risks is consistent with an asset manager's fiduciary responsibility and is required for investment professionals who adhere to the CFA Institute standards of professional conduct, which pretty much all of these fund managers do, right? You have to, if you are managing a fund, a public fund, you have your CFA designation. And so in this paper, the CFA Institute encourages all investment professionals to consider ESG factors where relevant, really as an important part of their analytical and investment decision-making process. And this is really regardless of investment style, asset class, or investment approach. So, we say all the time within our firm that ESG is not a scam, right? It's not simply a search for a low carbon emission fund, but it is a process. So, it's not just looking at Morningstar and saying, "Hey, here's a fund that seems to be ESG." It is looking at all of the funds on a platform and looking at how they're making decisions. Really doing a deep diligence, a deep dive on how each of these funds are making decisions, and ultimately that leads to better returns. It reduces risk. And it is the fiduciary responsibility. And so I think when we start having those conversations, that kind of gives plan sponsors a little bit of ammunition to go in and start these conversations at the table, because that I think that is a challenge, and that's one of the things that I've been hearing, is that not everybody within the organization knows how to go about doing this.
Yeah, that's so helpful. And picking up on some of the things that you said about ESG not sort of being a different set of issues than the issues that a financial analyst would consider in making a decision purely based on risk and return, but that really it's an integral part of risk and return and investment decision making. And I just wanted to highlight that a lot of focus is given to the risk of climate change and the potential for asset devaluation, whether it's stranded assets in oil and gas, or whether it's rising sea levels and the impact on real estate or other things like that. But that there's also a tremendous upside opportunity that as we rebuild the infrastructure of our country and of the world, that there's going to be tremendous value creation, new companies and growth and job creation. And so this is really not only a story about avoiding bad outcomes, but it's a story about creating our own positive set of outcomes that, aside from one's feelings of sort of like social responsibility, just as an investor who's looking for returns, can't be ignored. It can't be ignored. And so I feel really passionately about that, and just wanted to make that point. So Lisa, given these financial results, and the shift in investor preferences and really the evidence in the market about about where things are going. It's very frustrating that so few plans have embraced ESG thus far, and we've talked about some of the reasons why. And you started to talk a little bit about education and the importance of that. But can you talk a little bit more about what can an enlightened employee do who wants to invest sustainably and who wants to influence the organization that they're in to make these types of changes?
I think they need to educate themselves a little bit first, understand what's in their actual retirement plan, what the options are, understand what the options are outside of that. So while I know this initiative is focused on climate, there may be more luck, for example, getting a broad ESG fund into one of these lineups. I mean, certainly we've seen in the last 2 years just a tremendous focus on social issues and racial injustice, economic inequality. And I think we're going to see the investment world start to focus over the next 3 years as much on social as they are on climate change. And so I think those issues as well are galvanizing the workplaces. Climate is, but certainly diversity and inclusion are issues that are driving it. So thinking about what are the kinds of conversations that are have taking place in the workplace. We have on our website some documents that help a plan participant have this conversation. It's complicated. A small company is going to have a very different setup, probably for the retirement plan with different actors than a large company. And so I don't want to get into those details there, but having an initial conversation with HR is helpful. And as I mentioned to you, one of the things I do at every conference I speak at, whether it's on retirement or not, is say an actionable next step for you is to go back to your employer, whoever it is, media firm, small nonprofit, large nonprofit company, and say, do I have a sustainable investment option in my retirement plan? And if not, why not? Everyone can do that. So I think that's really important.
Yeah, that's great. And I wonder, Tiffany, if you have any other thoughts on that as you've engaged with your clients on this, on what can people do that want to foster these changes inside their organizations?
Yeah, absolutely. I think Lisa is spot on. In our experience, really understanding that within an organization, actually all of our clients are nonprofits. So there's typically, in addition to a foundation or endowment pool of money, which we also manage, there's the retirement plan, and those two things are housed in two different offices. And the retirement office tends to be, a smaller office. Possibly 1 to 2 people tasked with the everyday responsibility of that plan on top of the other responsibilities that they have. And they are what I would call kind of like the front line of the retirement plan. They're in a pre-COVID or post-COVID world, their office is right there. Participants can walk right past their office, and they are, they're kind of like the first line that people will go to ask about their retirement plan. And it's been my experience that front line, that those benefits people are very receptive. And I've gotten lots of calls, directly from a participant. Hey, I have a participant who has a question. And, so they are open, in my experience, they're open to feedback. And so, so the first thing I would say is they listen. So you as a participant have a lot of power. So I definitely agree with that. And the second thing is, from a plan sponsor perspective, I think it was Lisa who mentioned this, you should know what you own. We are now living in a time where people are really wanting to know where their dollars are directed, regardless of if it's whether they're in their retirement plan or outside of their retirement plan. We're just all a little bit more conscious of what's going on in the world. And so, and I did this, an exercise with a client the other day. We looked at what they were invested in, and it wasn't pretty. And not that we want to open up the floodgates, but I think the first step is understanding what you are invested in. How many, the funds that are on your platform, how much greenhouse gas does that equate to, right? How many tons of, of pollution, all of those things that can be with the right consultant or or the right tools, you can actually figure that out in a retirement plan. And so I would encourage everyone, all plan sponsors who are listening to this, to kind of go through that exercise.
Yeah, and I would add to that, we have worked with a couple of business coalitions. I mean, big publicly traded company business coalitions, ones that are more private focused, and had lengthy conversations with them about, this is how you do it. Here's a handbook. And what I found, it's true in almost all areas. You have to find the leaders, and you have to have the leaders speak out, because we can say it, Tiffany can say it, but if a company says it, if you're trying to get a company to do this, you need the company to say, this is why we did it. It really wasn't hard. This is the response from our employees. That is the leader, right? That is how you get change. You have the leader speak to, this wasn't rocket science, right? I see that all the time in the foundation world. If you have a foundation that has invested its endowment either entirely with a sustainable investment strategy or even partly, who do the foundation heads who haven't done it want to talk to? Those people. They want to know, how did you do it? What did your investment committee say? What did the program people say? Once they hear that, it's not so scary. So what I would recommend is you find the companies, you find the pension funds if you're going to deal with pension funds, you find whomever the sectors you're working with, you find the people who've done it and are willing to lead on that narratively. And people will follow that, because then they realize, oh, if that person can do it, if he can do it, she can do it, surely I can do it.
Yeah.
And Eric, I'm sorry to jump in, but this is the most exciting part of this, right? This is a huge, huge opportunity for leadership in a way that is aligned with customer and employee expectations. Yeah. Leadership on climate, leadership on corporate responsibility, leadership on social justice, and a whole range of opportunities, right? And so I totally agree that this is an opportunity for major employers to step up and lead in a way that's aligned with the ambitious commitments they've already made, and to meet growing employee expectations. And if you happen to work at a place that's not leading on this, we know that employees increasingly have influence in the marketplace and have been effective over the last 4 years in starting conversations within their place of work and raising the ambition of leadership on a whole host of things, from climate to marriage equality to gun violence, and a range of really, really important issues. So there's an important leadership conversation to be had, and I hope our discussion today is the beginning of helping to really kick that off across the country.
Oh. And as we talked about in preparation, all of us have these options at our companies or our nonprofits, and surely if we can do it, others can do it. We're all different sizes and we have different plans, but we've all done it.
Yeah, all such good points. I also wanted to mention that, there's many organizations that are focused on helping the defined contribution retirement savings plan world move forward and embrace sustainability. In addition to the plan that Tom and I have been talking about, that EDF and Ceres are leading, USCIF, which Lisa leads, is also very involved in advocating for this kind of work. The Intentional Endowment Network is focused on working with universities to make their retirement plans more sustainable. And we're actually collaborating with them to develop a toolkit with resources to support those who would like to see their organizations make these changes. So we're looking forward to being able to share those resources with any of you out there that may be interested as they become available. And we think there's a really exciting opportunity there. As we come towards the end of our time, I wanted to just give each speaker one last chance to sort of talk about what's the most important thing that you'd like to see people take away from this discussion today, and maybe an action that you'd like to see them take. So I'll start with you, Lisa. What do you want people to leave this conversation with, and what do you want them to go do when they go back to their day job?
I'd say the number one thing to know is it hasn't had the pickup we'd like, but that doesn't mean it hasn't had pickup. Many institutions are doing this, public funds, companies, nonprofits, foundations. It is happening. And if you're watching this and you're interested, learn a little bit about it. You can go to our websites and others and learn about pension plans and ESG. And then go to your HR department or to just your boss and say, or if you are the boss, just do it. But if you aren't the boss, go to your boss and say, how do we add this to our lineup? What needs to happen next? Can we convene a small group of employees to talk about it? And if they need more information, there's so many organizations you can come to and get information from. We'd be happy to help folks who are trying to move this through their institution. It's really a conversation. It takes an initial conversation, and then the ball either will start rolling or it won't, but it won't start rolling if you don't have a conversation.
And Tiffany, turning to you, what one takeaway would you like people to bring with them from this conversation today?
Sure. So there's a phrase that I always use. I say that a retirement plan doesn't cry when it's broken. And, we have plan sponsors have so many other things to focus on that are immediate needs. And so the retirement plan sometimes sits in the corner. And, as long as, participant contributions are being processed smoothly and the money is moving in the right direction, things seem to be, moving along just fine. But there are a lot of plan sponsors who haven't really, looked at their plans in a while. And so, not that I'm saying that their plans are necessarily broken right now, but just because it's not broken doesn't mean that there aren't ways to improve it. And, I believe that if you're considering adding sustainable investments to your platform, this is a way that can improve it. So just take a look at your plan. It might be a good time to just kind of do a pulse check on everything in your plan, including adding some sustainable investment options.
That's great. And Tom, same question to you.
Thanks, Eric. Thanks, everybody. I would love folks listening in today to start a conversation within their workplace and to consider joining our 401 Climate Initiative. I think I heard during the course of our last 30-ish minutes 4 really compelling reasons to do those things. One is that this is an untapped opportunity for leadership and leadership that's expected on climate and sustainability and a range of other issues. 2, that there's no trade-off, that responsible funds in most cases are outperforming. And so that's a false choice that we need to move beyond. 3, that it's an incredibly powerful opportunity for employee engagement and retention in a world where the battle for talent is getting tighter and tighter. And then the last and maybe most exciting to me is that if we do this and we do it together, we really can create a tidal wave that moves trillions of dollars towards responsible investments and towards solving critically important problems like the climate crisis. So I hope we can all work on this challenge together.
That's great. Well, I'd like to take this opportunity to thank you, the panelists, Tiffany, Lisa, and Tom. Thanks so much for your contribution and for all the insights that you shared with us today. I'd like to thank the audience. Thank you all for attending. You can find our contact information on the closing slide or on the conference directory. And we do hope that you'll reach out to us with any questions, and in particular, any companies that are interested in this 401 Climate Initiative that Tom and I have been mentioning. We'd love to hear from you, but please reach out to any of the panelists on any of these topics. Thank you so much for your time, and have a great rest of the day.